Bank stocks are crashing, but how bad is it really? Well, let's find out. With our first stock here, this is JP Morgan stock on the daily. And as we can see here, we had been building up this upward wedge pattern. But over the last week or so, we broke down below this key support line. And it hasn't been pretty for JP Morgan. Overall, if we look at it from the very beginning of last week, when we started seeing indications of weakness on Tuesday, actually, we got down as low as minus 16%. Now, we've recovered since then. We're about only 7.9% down. But nonetheless, JP Morgan is the biggest market cap wise banking stock out there. To see it come down that much is significant. Bank of America also seeing a breakdown below key support areas here that have been building up since June of 2020. The importance of a breakdown below a support line is dependent on how long the support line stretches. And this one stretches for 3 years almost. We broke down similarly to what we saw with JP Morgan. Look at all these big red candlesticks, guys. This is, something to behold here. We broke down back in Wednesday. And remember, Silicon Valley Bank didn't collapse all the way up until Friday of last week. So it seems like there was a little bit of front running with these banking stocks. The market knew something that the general public simply did not. Now, we have had a couple green candlestick days. We finished green today. But we'll continue to monitor the situation. This is a pretty stark breakdown below this support line. Wells Fargo, again, we see key breakdown from this support line that stretches all the way back out into 2020, October of 2020 in this case. A pretty similar patterns to the previous two banking stocks that we've seen before. Wells Fargo, another big banking stock. We broke down below this support line in our case here Thursday. And again, look at when this selling started. It started all the way back on Monday of last week on the 6th of March. So the banking stock, these banking stocks were front running the SVB collapse, the First Republic collapse, etc. All these slew of banking collapses that we've seen over the last 7 days. Now, we have had 2 consecutive green candlestick days, but these huge red candlesticks are significant. We just pierced through this support line like it was nothing. Now, let's take a look at the banking sector as a whole. The banking sector, again, broke down below this 3-year-long support line. We had turned it actually into resistance. We broke down below it back in September and have been since then using it as a resistance line for about 6 months or so now. Probably, actually, a little bit more than that. But look at this breakdown here, guys. Huge red candlesticks. This is extreme volatility over the last week or so, starting on Tuesday, March 7th. Again, front running the overall banking sector. This is what it is. KBWB and Besco's banking ETF. The overall banking sector was front running these banking collapses. We had clues of it since then. But good news, over the last couple of days, we started to see some candlesticks, some green candlesticks, and we actually had a bullish engulfing today. A bullish engulfing is when you have a green candlestick completely overtake the previous day candlestick. So we see this candlestick completely overtakes the one before it. In other words, it engulfs the previous candlestick. So this is a sign of a move up, at least on the daily level. Now, let's also look at the banking sector ETF, KPWB, which is what we had been looking at. Let's look at it in relationship to the S&P. The S&P, the entire market's been crashing this week, but How much worse has the banking sector been underperforming the overall broad market? In this case, a huge slice down of this key support line that we had been building up since September of 2020 in this case. So the banking sector as a whole has, this is a pretty stark and strong confirmation of a breakdown. And we're seeing a lot of the same pattern. We do see a bullish engulfing for the banking sector compared to the S&P. So I don't know, there's an ongoing philosophy. You never try to catch a falling knife. I'm not sure I would dabble into the banking sector quite yet. There's a lot of faith that has been destroyed from the banking sector. This could be the very beginning of much worse things to come. Now, there is good news. There is a silver/gold lining in all of this, especially if you're a precious metals investor. Let's go ahead and take a look at gold here. Gold bouncing off its key support area here. And we've just had, 1, 2, 3, 4, 5, 6, 7, about 7 days worth moving to the upside. We had one red candlestick. That was pretty much it. A bloody nose, some people might call it. But we've had a strong showing for gold. Gold started seeing its rise Wednesday, March 8th here. Last week, coincidentally, around the same time, these banking stocks started showing weakness, even before the SVB collapse. Silver's also been performing quite well. Gold and silver are tied at the hip, but we, as precious metals investors, we want to see silver begin to outperform gold. A silver outperformance of gold indicates more strength in the precious metals market. So we have this key support area. We bounced off it. In our case, we saw our first green candlestick on Thursday, again last week before the SVB collapse, and we've looks like we've kind of plateaued a bit. We're sitting at about 2168 at the time of this recording, and we've got a pretty strong bounce. So, has silver been outperforming gold? Let's take a look at this chart here. The chart above is the gold to silver ratio. Essentially, how many ounces of gold can you buy with ounces of silver? Right now, gold has broken out compared to silver over the last few months now, since the beginning of the year. Friday, January 13th is when we broke out here, and we want to see this ratio go down. We want to see silver begin to outperform gold. Again, the higher this chart goes, means that gold outperforms silver, but we want this chart to go down because that'll indicate a higher silver price relative to gold. And the chart below shows us just that. So the chart below is the pure gold price. So as we can see here, once we saw this price come crawling down, the gold price relative to silver come crawling down, the below chart started breaking up for gold. So once this broke out here, the gold price broke out here. Once this chart went down, we started seeing a decline in the gold price. Did I read that right? So this chart we're seeing it come down from September to January, meaning that silver was outperforming gold. Okay, right? And subsequently, we saw a rise in gold in the chart below. And when gold starts going up compared to silver, that's basically when we've seen kind of gold move kind of sideways. So we want to see the silver price begin to outpace gold. And gold here is really showing its key value, key value proposition as a hedge for crisis, as a hedge for panic. And actually, in my opinion, guys, gold is more of that than it is an inflation hedge. Gold is a safe haven asset. When there's panic in the market, when there's uncertainty, fear, uncertainty, and doubt, gold is the place to be. And when gold goes up, silver also goes up. So drop me a comment below. Let me know what you think. Do you think that this is the extent of the banking collapse, or is there more fireworks up ahead? And also let me know, do you think gold will continue to move higher as well as silver? Will the precious metals continue to play the role of a safe haven trade? Drop me a comment below. And as always, if you enjoyed this video, go ahead and give it a like. Hit the subscribe button. Hit the bell notification. Really helps me out. I'd really appreciate it. And until next time, guys, I will see you in the next video. Bye.